This is News Talk 980 CKNW.
If you own mutual funds, maybe an RRSP or specific stocks, chances are you're doing pretty well as markets on both sides of the border continue to hit record highs. And if you don't own stocks or mutual funds, don't worry, you're still getting part of the action through the Canada Pension Plan, Linda.
All right. We also got word today that Canada's major new trade deal with the European Union got the go-ahead for the European Parliament. And that is making Canadian exporters pretty happy because they're continuing to stress out about possible changes coming to NAFTA here in North America. With more on that, let's bring in Michael Campbell, host of Canada's top-rated financial show, Money Talks.
Mike, let's start with the markets. It seems that these record highs are almost happening daily. What do you think is behind it?
Well, you're absolutely right. I think this is the fifth day in a row for the Dow Jones and the S&P. But it's interesting, on the short term at least, what's driving Canada, what's driving the U.S. are different, even though all three, the S&P, NASDAQ, the Dow, and the Toronto Stock Exchange are all making new highs. And it starts with a few big factors in the States. First of all, there's still not a lot of competition for investors' money. We've got these historically low interest rates. Yeah, they're no longer on the bottom in the U.S., but it doesn't matter. The stock market's still a much more attractive alternative for a lot of people. Next, and this is the one that sort of is important that we seem to be missing when we hear about the analysis, is that you still got big problems in Europe. And Europeans are taking their money out of Europe and they're putting it into the U.S. And I still say that will be a major driver of much higher numbers over the next, say, 4 or 5 years in the New York Stock Exchange and the like. And then finally, this is the more short-term thing. The markets have loved the Trump election. There's no doubt about that. He's promised dramatic reduction in corporate taxes, reduced regulations, changes to the Dodd-Frank Act, which influenced the financial sector, which, by the way, is up 22% just since the election. And all of that's being seen as positive. I think maybe the big issue now is will investors be disappointed by the reality of Mr. Trump's tax plan? That's been the latest sort of catalyst here in the U.S. side of things.
Okay, what about Canada, though? You say things are different here.
Well, we still got that record low interest rate environment that makes stocks more attractive. That's there. But we're not having any push, federally for reduced regulation or reduced taxation. So I think what we could look for is that the major move in Canada is this recovery of the commodity market. I think people have to remember that oil's about up 100% since the lows last January. Lumber's up 45%, copper up 45%. So clearly I think the commodity is the side that's giving us the boost.
All right, let's take a minute here and kind of give us the details of this Canada-EU deal. Explain it to us like we're five. What do we need to know about this?
Well, first of all, it's the name. It's a comprehensive economic and trade agreement, just so people don't get mixed up when you hear people run around talking about CETA. Mm-hmm. That's what they're talking about, the EU trade deal. The bottom line is this, and we look at this for any trade deal, but the EU is getting access to 35 million Canadians. But Canadians are getting access to, 450, 500 million Europeans. If this thing, it's got some more hurdles, but this was a big one today, getting through the European Parliament. Well, you're going to talk about knocking off about 98% of the tariffs are going to get eliminated. And what that translates to in terms of trade is right now there's about $84 billion being done between Canada and the European Union. Well, a study conducted by Canada and Europe concluded that CETA would increase bilateral trade by 20%, boost Canada's income by $12 billion. The economic benefit might be the equivalent of creating almost 80,000 new jobs. And, the average Canadian household's annual income would be about $1,000 better under this agreement.
Which sounds awesome, and yet some interest groups saying, they're not in favor of this. Why is that?
Well, let's keep in mind that they're not in favor of any trade deal. There is an ideological bent there that manifests. You see it on what's called the far right and the far left, and that's what's happening in Europe right now. So it doesn't matter what deal you're talking about, they're against it. But here's the other one that's pretty obvious. Right now, some industries currently enjoy protection from outside competition. Well, they're not going to like it when that protection gets dropped. We're going to see some real complaints in Europe, from the farm industry there, who have tremendous protections and subsidies, et cetera. Well, they're not going to like when that, Canadian products start coming into that market. And then I think, the other big problem is this. Whenever you're talking a trade deal, whether it's NAFTA or the European Union one, the benefits are sort of on the economy as a whole. As I say, the Canadian economy will benefit, but not necessarily all individuals. And as I say, there's those industries that are subject to competition who will not like it. They're protected right now, so they're much better organized. It's tough to organize the whole country to support it, but it's much easier to organize, specific industries to oppose it. So I think that's one of the big, problem. And by the way, what I find so peculiar though is I'm seeing some of the same people who demand, and it's been consistent, that we diversify from the U.S. export market, and a lot of that's picked up under the Trump administration, that call. Well, they turn around and do a deal that was started by the Conservatives, now finished by the Liberals at the federal level, and they're against the EU deal too. Like, where are we expected to diversify away from the States if it's not in Europe and not in Asia?
So I'm guessing the Michael Campbell professional opinion here, the take on it is that this is a good deal for Canada?
It is good for the Canadian economy. It won't be good for every individual industry or group. But listen to this, though. There's a group called the Initiative on Global Markets. It brings together some of the best-known economists in the U.S. I mean, they come from Stanford, Harvard, MIT. They talk about a lot of issues. Well, in the fall, they talked about protectionism, again, on the spurring of Mr. Trump's attitude, and free trade. Well, listen to this. In their fall release, they said that literally 100% of the panelists rejected protectionism and favored free trade. And that's very consistent here. But I think for Canada, it's not very tough to understand. Imagine us as a store, and our possible people to sell to is only 35 million. We want to grow, though. We got to grow our economy. It's necessary to afford our social programs. Well, we need more customers more than our 35 million. So presto, NAFTA gives us about 460 million other people. The EU deal gives us access to about 500 million in 28 countries. I don't think it's that tough to understand. We have to grow our economy if we want to support our government programs. As an example, get the employment, as I say, estimated 80,000, and there's only 35 million of us. Yeah. I mean, I'd love to see us remove our interprovincial trade barriers too, by the way, but this is how you do it.
Yeah.
I mean, we're getting access to two richest consumer markets in the world when you get to the EU and you get into Germany and France and that kind of thing. So I think it's straightforward.
Interesting times. Thanks so much for joining us, Michael Campbell.
I appreciate it.
Vancouver's News, Vancouver's Talk. This is News Talk 980, CKNW.